On the 8th of July 2024, Corning Incorporated, ticker GLW, boosted their guidance due to the strong demand for their fiber optic products used for a multitude of purposes. And as a result, the stock gapped up around 6%, providing a superb opportunity for an EP play, my bread and butter setup. I ended up making $2,538 profit in 15 days, which was around 2.7R, meaning that for every dollar I risked, I made $2.7 back. This was a nice and easy trade, and in this video, I'm going to talk you through exactly how I played this one. Now, before we get into my actual trade, let's talk a little bit about the company first. Even though I don't care for all the little details of each company, as a trader, you need to at least know some of the basics. So GLW Corning Incorporated is a large cap tech company valued at around $35 billion at the time of my trade. Their float size is around 775 million, which is quite high, but still below my limit of 1 billion shares. Now, I don't like to trade stocks with a float size that exceeds 1 billion shares, simply because the higher the float size, the more buyers are needed to move a stock higher. That's why low float stocks can be so volatile, as it's much easier for traders to move the stock in either direction. Anyway, the company basically creates materials and products used in a wide range of industries and sectors, including AI, which is really the main theme for this trade. And that's about as much detail as I know about the company. I didn't look into their financials or anything else because, quite frankly, it's not necessary for the way I trade stocks. So without further ado, let's jump straight into the setup. On the morning of 8th July 2024, GLW raised their Q2 guidance to reflect the bump in their AI related products. Because of this news, buyers were already loading up on the stock in the pre-market, so I put it on my watch list for a potential EP play. Now, if you don't know by now, an EP setup is basically any stock that gaps up on a potential game-changing catalyst. These types of stocks can make very quick and explosive moves in a short period of time, but you need to be quick in order to catch them. But to be completely honest, I did have my doubts about this particular setup, because if you look at the recent history of the stock, nearly every major gap up has sold off shortly after. Now, I don't like this type of price action because obviously you would likely end up getting stopped out anyway and taking a loss. Ideally, you want to see a history of positive reactions to catalyst. In any case, I thought it was worth a shot since price action was orderly, the AI theme was hot, and the stock had no major resistance nearby. So when the market opens, the stock opens above all nearby resistance levels. The next major resistance area I had drawn out was at 43.50, which was a fair distance away. That's great because there's enough clear space for the stock to travel through before it hits a ceiling. I looked to see if the stock's relative volume was above 400%, as I typically don't enter EP trades with anything less than that. I saw that it was just above 500%, so that's perfect. Now at this point, I'm just waiting for the range to be set on the first 5-minute candle, and then my entry would be the breakout of that candle. Of course, if the range is too wide, then I'd have to pass up on the trade. Remember, the wider the range is, the higher you need the stock to climb in order to make a good return. At 9.36, yes, 9.36, price breaks above the high with 540% RVOL, and I buy 1,136 shares at an average price of $41.52, and I set my stop loss just below the low of the day. Now all I have to do is just sit on my hands and let the trade play out. Now let's talk about how I managed this trade. I set my first target conservatively at 2R, meaning that when price reaches 2x my risk, I sell some of my position. In this case, my plan was to sell 35% of my position if it were to reach my target, of course. Every time I enter a trade, I try not to have high expectations. I always try to be mentally prepared for a loss because 2/3 of the time I'm hit with a losing trade, so I have to get used to it. Luckily for GLW, price makes a nice run without a pullback and hits my first target at 12:46 p.m. I sell 35% of my position and keep the rest on for a bigger move. I'm well aware that there's major resistance slightly above at around $43.50, which I've marked out with a purple line. The price kind of just hovers below that level for the rest of the day, and I have no idea whether the price will break through this resistance level or reject it completely. The worst case scenario is that my stop loss, which I've moved to break even, gets hit and I walk away with a small profit. The next day, the stock gaps up slightly above the resistance level and continues its slow climb in the following days. Now at this point, I'm looking to see when and where I can move my stop loss to. Ideally, what I would have liked to see was a shallow pullback followed by a higher low. If this scenario occurred, I would have placed my stop loss just below the higher low. This never happened, so I just waited to see what the stock would do at the 10 EMA. Either it was going to bounce off it and continue its ascent, or lose all upward momentum and sell off. On the 23rd July 2023, price closed below the 10 EMA, so I made the decision to sell the rest of my position. I wasn't willing to give up any more open profits with this trade. It's a good thing I did sell it because a few days later, GLW made a huge gap down on the announcement of their earnings. Had I held onto the stock, the gap down would have completely blown past my original stop loss and I would have suffered a bigger loss than anticipated. And that's it. I was out of the trade for a total of $2,538 profit in 15 days, which equated to a 2.7R trade. Not fantastic, but good enough nonetheless. Anything that's over 2.5R, I'm pretty happy with. Unless, of course, I sell too early and the stock goes to the moon without me. Then I'm mad and get feelings of FOMO. That happens every now and again, but as a trader, you just have to accept it as part of the game. Anyway, the profits from this trade helped to cover some losses with some change to spare. Then it was on to the next trade. That's all for now. Thanks for watching this video, and if you enjoyed this trade review, just hit the like button and subscribe for more swing trading tips.